Welcome, astute traders, to Explain the Charts. Today, August 10th, 2025, we are embarking on a deep dive into the AUDUSD currency pair. Our goal is to meticulously combine the very latest news insights with comprehensive multi-timeframe chart analysis, aiming to illuminate potential trading opportunities and critical price levels to monitor. To begin, let's illuminate the current fundamental landscape, drawing upon recent Google search results and prevailing market sentiment surrounding both the resilient Australian dollar and its influential counterpart, the US dollar. The latest reports from Friday, August 8th, indicate that the AUDUSD pair consistently traded around the pivotal 0.6510 to 0.6522 mark. It experienced only a marginal decrease of just 0.02% in the final 24 hours leading into the weekend, as meticulously tracked by TradingView. Despite this minor pullback, FexStreet's technical commentary on the daily chart broadly suggests a prevailing bullish market sentiment, signifying underlying strength and optimism for the Aussie currency going forward. A significant and persistent fundamental catalyst for this notable resilience in AUD has been widely attributed to a weakening U.S. economy. With the dollar showing signs of a weekly loss, this consequently provides a strong and consistent tailwind for the Australian currency against the greenback. Furthermore, Economies.com specifically highlighted that the AUDUSD price recently surged upward on intraday levels, crucially breaching a key bearish correctional trend line. This is a powerful technical confirmation of a potential short-term momentum shift towards bullishness, indicating a change in immediate direction. This impactful move occurred despite various global currency fluctuations, allowing the Australian dollar to firmly hold its recent gains. It remains on track for a solid weekly advance of approximately 0.8%, underscoring its relative strength in the broader forex market. Now, with our fundamental understanding established, let's seamlessly transition to the actual price charts to meticulously examine how these news narratives and intricate fundamental undercurrents are visually depicted in the historical and most recent price action of AUDUSD. We initiate our technical journey with the daily chart, which offers an indispensable macro perspective of AUDUSD's price movements spanning the past year, from early 2024 right up to the present day. Over this extensive period, we discern considerable price volatility and oscillations, with the pair establishing a broad trading range, moving between notable approximate lows of 0.60 and distinct highs approaching the 0.69 level. A prominent bearish phase undeniably gripped the market from September 2024 through the early months of 2025, effectively pushing the pair from its higher echelons near 0.69 down towards the critical and repeatedly tested 0.61 to 0.62 range. This 0.61 to 0.62 range has consistently served as a robust long-term support floor, indicating strong buying interest at these levels. A particularly dramatic and high-impact event was the sharp, aggressive decline witnessed on April 4, 2025, when price plummeted rapidly from 0.6325 to an extreme low of 0.6041, representing a significant capitulation move that caught many by surprise. Crucially, this aggressive sell-off was almost immediately met with an equally powerful and robust recovery, vividly demonstrating substantial underlying buying interest at these distressed lower price points. This emphatic rebound strongly reinforces the 0.60 to 0.61 area as a major, resilient demand zone for the long term, a level to watch for future entries. Following this pivotal recovery, the AUDUSD pair has subsequently embarked upon a measured yet consistent uptrend from its significant January and April lows. This provides compelling visual confirmation that aligns perfectly with the prevailing bullish sentiment observed in our earlier news analysis, showing sustained upward momentum. On the upside, we have identified a formidable and historically significant long-term resistance area concentrated around the 0.67 to 0.68 region. This zone is clearly marked by multiple price rejections and established previous highs seen throughout July, August, and September of 2024, representing a substantial overhead ceiling. More recently, the narrower 0.65 to 0.655 price band has actively presented itself as a critical short to medium-term resistance zone. Prices have consistently found difficulty in breaking decisively above it during both May and June 2025, and this level also reflects the prior significant high in early April 2024 near 0.657, making it a key battleground. Now, to gain a more granular understanding of recent market dynamics, let's zoom into the 1-hour chart, specifically focusing on data from late July 2025, which serves as an excellent illustrative example of typical intraday price action and short-term trends. Within this hourly time frame, we prominently observe a clear and consistent upward trajectory commencing from approximately 0.6504 on July 21st, pushing steadily higher to test levels around 0.6620 by July 24th. This unequivocally showcases building bullish momentum, indicating sustained demand over several hours. This sustained upward movement on the hourly chart profoundly demonstrates how consistent buying pressure can effectively accumulate and maintain strong momentum over several trading days, often preceding or confirming larger moves on the daily chart. However, it is equally vital to critically acknowledge the subsequent minor pullback or consolidation that ensued, settling back towards the 0.6606 level. This serves as a crucial reminder that even within robust uptrends, periods of natural profit-taking or market indecision are inherent and must be prudently anticipated by astute traders. Skillfully analyzing these subtle hourly oscillations allows traders to significantly refine their precise entry and exit strategies, thereby optimizing their ability to capitalize on short-term price swings while diligently aligning their positions with the overarching broader daily trend. Moving to the most immediate and highly responsive time frame, the 15-minute chart, we acquire an even more granular and timely perspective, providing unparalleled insight into the rapid market dynamics right up to Friday's closing bell on August 8th. By focusing on the critical period from August 7th to August 8th, this precise time frame vividly illuminates the recent powerful bullish impulse, where price aggressively surged from its base around 0.6495 to break decisively and confidently above the 0.652 threshold. This significant and rapid short-term rally directly correlates with the recent news reports, explicitly confirming that AUDUSD successfully breached a previously established bearish correctional trend line on an intraday basis. This is a potent technical confirmation of a substantial shift in immediate bullish momentum, signaling a change in market control. For highly agile short-term traders, the tightly clustered area around 0.6495 to 0.6500 served as an immediate and crucially effective support zone during this recent vigorous upward movement. This offered ideal tactical entry points for discerning long positions, allowing for quick profit opportunities. On the immediate upside, the 0.6528 level, which was pointed out in recent news as a key resistance barrier, is visibly acting as the most significant and formidable challenge that the bulls currently need to decisively overcome. A clear, definitive break and sustained close above this pivotal 0.6528 level on this 15-minute chart, ideally accompanied by a noticeable surge in trading volume, would undoubtedly serve as a very powerful short-term bullish signal. Such a move could potentially clear the path for further advances towards higher resistance levels, confirming the strength of the breakout. Conversely, a strong and evident rejection from this critical 0.6528 resistance, perhaps underscored by the formation of strong bearish candlestick patterns like pin bars or bearish engulfing, could easily lead to a rapid retest of the immediate support around 0.6500, or even a more significant pullback towards 0.6485. It is unequivocally crucial for day traders to meticulously monitor volume accompanying these short-term breakouts or breakdowns, as high volume imparts substantial conviction to the price move, strongly suggesting robust institutional participation and follow-through, while low volume could indicate a false move. Furthermore, keenly observing for any divergence between price action and momentum indicators, even on these compressed shorter time frames, can provide valuable early warnings of potential trend exhaustion or signal impending reversals, giving traders a critical foresight advantage for timely exits. Synthesizing our comprehensive fundamental insights with our meticulous technical analysis, let's now consider the broader implications for both the short-term and long-term outlook of AUDUSD, providing actionable conclusions. For the short term, compelling arguments for a bullish bias are strongly underscored by the recent successful breach of the intraday bearish trend line, which unequivocally signals renewed positive momentum and a palpable shift in immediate market sentiment. Moreover, the ongoing and widely recognized narrative of a persistently weakening U.S. economy, potentially exacerbated by lower-than-expected inflation reports or dovish commentary from Federal Reserve officials, continues to exert a strong and favorable fundamental tailwind for the Australian dollar, as long as this economic divergence persists. In the long term, the exceptionally robust bounce and subsequent sustained recovery from the profound 0.60 to 0.61 support zone, which followed the highly volatile April 2025 low, emphatically demonstrates that significant price dips are consistently being met with aggressive buying activity, thus reinforcing the overarching bullish bias derived from the daily chart structure. This long-term support level acts as a strong foundation, suggesting that buyers are keen to step in at these valuations. However, it is prudent to acknowledge several inherent factors that present compelling reasons for caution and potentially warrant adopting a bearish stance, especially if the U.S. dollar manages to find renewed and unexpected strength from forthcoming positive economic data, which could rapidly reverse its current trajectory. The immediate overhead resistance at 0.6528 is more than just a numerical value. It represents a critical psychological and technical barrier that bulls must decisively breach and hold above to truly confirm and sustain the current short-term upward trajectory. Beyond this initial hurdle, the formidable and historically proven longer-term resistance located within the 0.67 to 0.68 range on the daily chart poses an extremely significant and enduring challenge for any truly sustained long-term rally, effectively acting as a potent ceiling for price appreciation, indicating strong selling pressure here. A clear and unambiguous failure to breach the 0.6528 resistance, particularly if it is accompanied by increasing bearish volume and decisive bearish candle formations, would strongly signal a high probability of a short-term trend reversal or, at minimum, a period of extended consolidation. Conversely, a confident and high-volume breakout above 0.6528 could swiftly propel the price to test the next crucial resistance level around the 0.6550 mark and from there, potentially extend gains towards the 0.66 area, indicating a continuation of the bullish momentum and opening up new long opportunities. For agile, tactical short-term traders consistently observe for specific bullish candlestick patterns, such as clear bullish engulfing patterns or hammer formations, precisely at identified support levels, as these often precede upward moves. Conversely, watch for bearish patterns like shooting stars or evening stars at resistance, as these provide invaluable real-time confirmation for precise entry and exit points, helping you manage risk and maximize returns. Furthermore, diligently monitoring the overall market order flow and analyzing depth of market indicators can offer profound real-time insights into immediate supply and demand dynamics, granting experienced traders a distinct edge in navigating volatile market conditions. It is imperative to always remember that market volatility can surge dramatically around major macroeconomic news releases. Therefore, it is absolutely paramount to consistently consult and adhere to a detailed economic calendar for all upcoming announcements from influential central banks, specifically the Reserve Bank of Australia and the U.S. Federal Reserve. To recap the crucial price levels to keenly watch, on the upside, immediate resistance is firmly established at 0.6528, with the formidable major long-term resistance situated within the 0.67 to 0.68 zone, representing ambitious targets for bulls. On the downside, the 0.6500 psychological level will serve as the initial short-term support, closely followed by the 0.6485 area, and for the foundational long-term stability of the pair. The robust support for AUDUSD remains consistently strong around the 0.60 to 0.61 mark. Offering unbiased predictions, we estimate approximately a 65% likelihood of AUDUSD making a concerted effort to retest the 0.6550 resistance in the immediate short term, contingent upon the US dollar maintaining its current subdued performance and global risk sentiment remaining broadly positive. This upside likelihood would be substantially reinforced and gain further traction if we observe stronger than anticipated Australian economic data, particularly in areas like inflation or employment, or any explicit indications of a more dovish monetary policy stance from the Federal Reserve. Conversely, there's roughly a 35% chance of a noticeable pullback towards the 0.6500 or even the 0.6485 support levels, especially if surprising positive U.S. economic data emerges, triggering a sudden and robust resurgence in U.S. dollar demand, or if there's an unforeseen negative shift in overall global risk appetite, prompting a flight to safety. Conditions that would strongly reinforce a potential downside move include a definitive failed breakout above 0.6528 followed by convincing bearish candle formations, or significant geopolitical events that compel investors to seek safety in the US dollar, strengthening it across the board. Looking ahead, keen traders must pay exceptionally close attention to the upcoming consumer price index reports from both Australia and the United States, as these critical inflation figures are pivotal in shaping future central bank policy decisions and ultimately currency direction, potentially causing significant volatility. Furthermore, any unexpected shifts or explicit changes in interest rate rhetoric from either the RBA or the Fed will undoubtedly act as major market-moving events, so remaining thoroughly informed and prepared for these announcements is paramount. Finally, always prioritize and meticulously implement robust risk management strategies by establishing appropriate stop-loss orders and carefully sizing your positions, ensuring your valuable trading capital is diligently protected against unforeseen and rapid market swings, which are common in Forex. And remember, continuous learning, disciplined execution, and unwavering adaptability are truly the indispensable hallmarks of consistently successful trading in today's dynamic and interconnected Forex markets. That concludes this comprehensive, in-depth analysis of AUDUSD right here on Explain the Charts. Thank you for joining us on this analytical journey, and we eagerly anticipate seeing you in our very next video. Don't forget to like, share, and subscribe for more insightful and timely market analysis.